Welcome to AgriVisions, a program of First Dakota National Bank. I'm Michelle Rook with Jeff Wolfgram, manager of Dakota MAC. Jeff, let's talk about the interest rate climate and the steepening that you're seeing of the yield curve. What does that mean for farmers?
Yeah, what that means for farmers and really what we've seen since about August of 2024, we've started to see where there's a difference between long-term rates and short-term rates. We had a period of a couple of years, basically July of 22 until 2024, where long-term rates many times were lower than short-term rates. So now when we talk about the steepening of the yield curve and getting to more of what I'd call more of a normal yield curve where long-term rates are higher than short-term rates, I think it gives the client still a lot of choices, but maybe that decision making isn't quite as easy because when long-term rates were lower, it was probably a no-brainer. Gosh, why wouldn't I want a 15 or 20-year fixed rate loan at a rate less than, let's just say, a 2 or 3 or 5-year rate?
And what kind of loan demand are you seeing for 2025?
We are continuing in Dakota MAC and at First Dakota branches to see a lot of loan demand. 2025, if I look at the first few months and compare that to 2023 or 2024, it is about doubling in originations in 2025. So I would say the first quarter of 2025 was more purchases, very, very busy and active market here in southeastern South Dakota and all of the territories that we serve. Now what we're seeing into the second quarter is some of the refinance requests, which is good. It's a good opportunity for people to still lock in those rates. During the pandemic and when liquidity was really, really high for a lot of producers, they were trying to finance, say, ag real estate over 5, 7, or 10 years. Now they're coming in and they're looking to restructure that, which is good. So we're seeing some of those requests.
Thanks so much. That's Jeff Wolfgram, manager of Dakota MAC with today's AgriVisions.